Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday the Australian dollar initially pulled back during the trading session after a surprise dovish comments contained in the minutes of the Reserve Bank of Australia Melbourne Cup Day November interest rate meeting. However, from the weakness, the bulls quickly returned and erased much of the losses after rebounding in front of the level, now after a few times, of 67.70. Still regarded as a place of demand, the market has posted a bullish outside range day. At present, the resistance still holds at 68.40, and it is assessed that above there, supply should come back into the market around 68.85.95. Overall, we do need confirmation to this outside range day, although the break above 40 may confirm it, but whether or not the bulls have the momentum to take it higher is another question, because we're still trending to a bearish case, and the MACD is also remaining negative, and the RSI is flirting with the midway point. So I feel the market should fail and keep on track for at least another down test to 67.70. When you look at the euro, you can see once again the market is a little bit hesitant to take the challenge towards the upside and still sees the resistance around 111.15.25 as a cap. It is assessed that a break of 110.35 should give further weakness and look back towards the downside of 109.50.70. I still regard 111.15.25 as a supply zone. The dollar yen, well, you can see the market was again weaker overnight, but has given some question to this doji. Nevertheless, from the pattern, I believe the market is still destined towards 107.85 to 108 the figure. Any advances is a gain opportunity, but with the risk factor coming into play, that safe haven demand still remains the theme, because President Trump threatened again once again, that is, to rise tariffs on China even higher if Beijing doesn't offer a good trade terms. He said overnight in a cabinet meeting that China is going to have to make a deal, and if they like it or not, that is it, as I view it. And if they don't make a deal, then I just have to raise the tariffs even higher, he said. So once again, if safe haven demand is stronger yen and weaker US dollar, which keeps this pattern in play, and also to the marriage to the MACD and the RSI. Sterling still remains sideways in this sandwich of 127.80 to 130.55, and just noise is just being seen. What I mean by that is whipsawedness is playing the role and likely to continue. So I'd rather keep away from the pound at this present stage, and still seen as a high risk trade if you place a bullish or bearish outlook to that, as the technicals aren't giving away too much. Gold again finds momentum. We've got two bullish hammers, and now expecting to see further gains towards the upside and still holding towards an objective of 1,488 to 94. Dips are likely to be shallow and now sees support from 67 beneath at 63. With the foul break of 57.55.80, the market is now challenging this support line, which is seen around $55 a barrel. The bulls do need to act today, as a close beneath there tomorrow morning at 8 o'clock New York time. That would be, or Sydney time, that is, New York close, is that I'd be expecting to see further weakness. But I'm not going to throw the towel in yet, even though the technicals are bearish. Let's see if the bulls can rebound from this level and take it back up to 56 to 57 and maybe higher. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to this new day.